Hey everyone, this episode is brought to you by Avalanche. Everyone's favorite red coin is a fan of On the Margin, and we are a fan of Avalanche as well. Talked about it on the program before. Avalanche is a very cool solution. Their subnets allow for a very scalable blockchain that's also interoperable at the same time. And it's not just me. The institutions are noticing and they're building on the evergreen subnets as well. You're going to be hearing all about some of those institutions later in the episode. For now, Avalanche, thanks for making this possible. Hey everyone, this episode is brought to you by Kinto, the safety-first L2, accelerating the transition to an on-chain financial system. You're going to be hearing all about them later in the episode, but for now, on with the program. Welcome back to another Guys Emporium Roundup. I got Felix, Tyler, Quinn. Fellas, welcome.
What's going on?
Gents.
So
to celebrate the big win, I wanted to wear my whip hat, celebrate celebrate all the alts and their successes.
I thought you were just about to stand up and show some Bitcoin stocks in homage to Yusko.
No. It's Quinn whip hat today to celebrate last week's victory. It wasn't just the cold brew speaking.
I mean, it was a big week for crypto, but actually before getting into Quinn's victory dance, and we got to talk about this ETH ETF and our banana zone prognosis. Got a couple updates on the blockworks side of things. So actually wanted to announce that Felix has joined blockworks full time. So he's been kind of subbing in here part time on the margin roundup, but it's now a full time fixture of blockworks and on the margin going forward. So Felix, feels good to finally announce that, but welcome, brother. Google gobble, one of us.
I feel like it's been a long time coming, and kind of like I'm coming home. I've been a long time listener of blockworks, and it feels very right, and excited to be diving in more. And yeah, we'll start publishing some interviews I'm doing with some really smart and interesting people. And yeah, it's going to be awesome.
Hell yeah, man.
Congrats,
Can't
Felix.
Thank you.
Yeah.
That's what now that you passed the CFA level 1, that's what blockworks needed to see before they hired you.
I was going to say, that's why we were waiting. We're like, yeah, I really want to see the CFA come in before we commit to this.
Now you got to wear a suit next up blockworks suit.
Yeah. Jack rocks the suits on like every interview. Yeah.
Jack's a beauty.
I kind of love that. He's a total curveball.
Dude, absolutely. Yeah. He's a bit of an old soul. You know what I mean? He like rocks the suits for the interviews. And I always see that. I'm like, damn, Jack, you make me look. People in the interviews for On the Margin will be like, Mike needs to shave.
I know. I decided to shave, but I got the mustache because I wanted to be more like Nick Carter.
Yeah. Oh, did you see that the fight?
Maybe you could step in and fight him.
Yeah, I know.
Yeah.
I said to be more tan than live in Miami, and then maybe I'd be there. So
we can drop this in the show notes for folks who aren't in the weeds of the crypto stuff. Nick Carter, one of the managing partners at Castle Island, thought leader, pro Bitcoin guy for a long time. He's great. He was going to fight David Hoffman, the host of Bankless. Did you guys see the video that he posted this week?
That went hard.
That went hard. Yeah. It's like, Jesus, dude. I mean, I assume you were training for this, but I didn't know you were going to bring in the damn film crew.
I did a couple of workouts with him down here, and he was taking it serious. That's what I think. I think Hoffman, tough to see because Nick was working really hard.
I want to stand up for my boy David, though. He's been training too. So it's also, boxing is also it's an endurance game. You don't want to be like kind of top heavy gym strong. You want to be like full body endurance strong. Although, to be fair, it looked like Nick was doing that. So, yeah, I'm not saying I would have loved to fight Nick after seeing that video, but last plug here as well is I'm going to shout out Permissionless. Permissionless has been shaping up. We got some great new speakers locked in. Novo, we finally bagged Novo after many years. He's going to be there alongside DTAP. Bunch of your favorite macro folks. Definitely go and check it out. I feel like I'll shout this crew out. I feel like we've done a really good job of calling out some of the alpha recently, although we got to get an update on the banana zone thesis because despite your whiff hat, Quinn, I'm not sure you're feeling as bullish this week as last week, but come on down and hang with everyone at Permissionless. It's going to be a blast. Salt Lake City.
Live Dudes Emporium recording.
A live Guys Emporium. Absolutely.
Have you guys ever been to the Salt Lake City airport? No. You can eat off the floor. It's incredible.
Yeah. It's huge now too. It takes like an hour to walk from end to end.
Yeah. Thank you, Tyler. I forgot to bring up the floor of the airport as the selling point for Permissionless.
Yeah, so that's the reason to go. Yeah.
Should have led with that, obviously. Actually, so here's another funny selling point that we didn't plan. The final debate between Biden and Trump is taking place in Salt Lake City on the days of permissionless. So if you want to go
still
see,
Biden.
Yeah.
you think he would get subbed out at this point?
Yes. Did you see Vivek's thesis? It's a little conspiratorial, but like I totally believe it. It's the earliest they've ever done a presidential debate in the history of the elections. And so if Biden falls flat on his face and they wake up the day after and polls are kind of ripping in Trump's favor still, it's enough time to kind of sub in Gavin or Michelle Obama or something. I kind of buy it, to be honest. I don't think they're going to just stand down if he's like down 20 points in the polls going in.
Yeah. I mean, what we learned this week is that the Democrat Party is pretty keen to pivot pretty aggressively on pretty hardline stances on things. Seen a complete flip in crypto policy over the last week.
Felix, you want to give us the update on this whole? I mean, I also just spoke to Eric Balkunas and James Seyfried, so I can maybe front run our interview a little bit. But yeah, like what happened with this whole ETH ETF? This is, even for crypto, I mean, this has been an absolutely wild week.
Yeah, I mean, I think a lot has been said already on the actual ETH ETF approval, and you can get into some of the specifics you learned from the Bloomberg lads. But overall, for me, I've been looking at the bigger picture of, it seems to me like some sort of inflection point happened around early last week, where we saw a lot of key Democrats break rank in terms of supporting Senate bills that were pro crypto, and namely like Chuck Schumer, the Senate leader, was part of that breaking rank, which was a pretty interesting indicator. And basically, ever since that day, we've just seen tons of news headlines pass. We've seen like the FDIC chair resign. We've seen a complete flip in terms of discussions and deliberations on the ETH ETFs from the SEC. Crypto bills are getting passed through the House and through the Senate. It seems like, for whatever caused it, maybe it was, Trump polling where, as we've been talking about over the last couple of weeks, he's been starting to be pretty pro crypto, and at the same time, his polls have been surging. And it seems to me like they started to notice the sunk cost and hole that they're digging themselves in terms of crypto, where being against it wasn't getting them much marginal gains, but it was definitely getting them some significant marginal losses. And they're seeing a lot of these sort of centrists, even like slightly left folks that are very pro crypto, start to move towards considering voting for Republicans and Trump just because they're so outright pro crypto. And so that entire narrative has just completely flipped on its head in the last week and a half. And it's really culminated in basically yesterday, we saw the first step in approving these ETH ETFs, whereas even just as much as a week ago, odds in the market were like sub 20% on that occurring. And it sounds like things are moving ahead. What did you learn from your interview this morning, Mike?
I always think it's helpful to get the perspective of people that are completely outside of the crypto ecosystem and bubble. And the reason why is just because there's often, in my experience, a pretty wide gulf in between how people in crypto think versus people that are outside of the ecosystem. Twice this last week, some of these internal views, just being in crypto all the time, that I'm always hopeful are true, but I'm not really sure are true, were confirmed. And both of those confirmations, like things that I wanted to be true, but didn't fully in my heart of hearts believe, is one, that crypto is actually going to matter as a political issue this year. That sounds like the sort of thing that people in this industry sometimes want to be true and say a lot, but I'm not really convinced of. And clearly this just moved things on the largest stage that there is, the US election stage, which is kind of insane to me. And then the other thing is that everything that's been going on behind the scenes of the SEC and them trying to stamp down on the threat of crypto it's been entirely politically motivated this entire time. It's, Eric used this phrase, there's a lot of innocence lost if you were working at the SEC and you were told that, yeah, we're, making all these arguments on the basis of technical, real legal reasons, and these crypto guys are doing bad stuff and we can't get it through. And then one phone call from the White House and you change everything. I mean, just imagine, being an SEC worker and being like, oh, this is how it works. It's just kind of laying bare just how nakedly bad this system is working at the current moment.
On that point, this is the Tyler Neville 20,000 foot view, generational arbitrage. The walls of stultification on the frontiers are falling here. And you can tell because, I've said this a bunch of times, but Henry Kissinger passed away. He was, the accelerant to globalization and opening up China. Then you had Klaus Schwab just step down from the World Economic Forum. All these like leaders that were in these like institutional structures, the age dynamics are slowly changing here. And I think that's really powerful. And guys like Ryan Selkis are leading the charge. You know, I don't follow this like super closely, but Jake Chervinsky, you know, they're becoming more powerful voices in our generation. That's what you're sort of seeing, that flip. Vivek, that flip, I think, is important to watch. I think we should have a monitor of all these things happening, because like this Klaus Schwab thing is not, you know, isolated. This is a demographic thing that's just going to continue happening. And I think that our voices in millennials, Gen Zers are going to become more powerful here. And we might actually be seeing the actual realities more clearly than boomers and all these other demographics that are following different news sources. I think that's sort of what's going on here.
I just don't know how you maintain any credibility as like a human being when you flip-flop this easily and have no merit. You know, clearly it wasn't based on merit previous views, but it's like governments don't even care anymore about reason and logic. It's just, that's the bigger picture here in my view, is it's incentives. At the end of the day, everything boils down to incentives. And that's how I usually develop my worldviews. You look at the Biden SPR release, which we'll get in the macro side more, but it's the same thing. It's like, we got to get inflation down to get votes, and oil's at the lowest prices it's been in 2 months. And we should be refilling the SPR, but fuck it. We're going to drain it. You know, we got an election to win. You know, we're going to flip flop views till the voters come our way. And it's just like, you seeing these huge whiffs of desperation in it. And I think people are starting to get the message, and it's shown in the polls.
Yeah. I mean, it's unfortunate that we have to look through everything through this political lens, but it's the way of things right now. Like, every institution is getting politicized. Every decision right now, especially in the final months in the lead up to an election, like every decision that's being considered. So we need to consider it as well.
If you think about it from the incentives, they already have the votes for, like, you know, they know they're going to get the boomer votes, or where the boomers lie. The next generation is where the marginal voter comes. And that's where, you know, you have to figure out the pockets of what moves those things. And I think that's totally what we're seeing.
I'll just add the disclaimer, you know, I don't really love in general talking about politics and all this stuff, largely because I feel like it's pretty messy. And also I just feel like that's not why people come to the show in the first place. But Tyler, I agree with you. I think this was just pretty straightforwardly a political miscalculation here. And they, on the one side of things, you've got people that own crypto and have a financial incentive, but also one thing that crypto's been pretty good for is having super rabid single issue voters on the side of it. It's unclear how large that population is, but it's something. And then there's not very many people on the other side that are really incentivized for this not to happen. Most people are apathetic, I would guess, to slightly negative, but no one's going to stand hardline on the other side. And so this just felt like a pretty straightforward miscalculation. And, you know, Quinn, to your point before we got on here, this is how democracy is supposed to work. Our policymakers are supposed to respond when there's a strong response from the people. Yeah, they're probably just looking down the line as well. It's like, do we really want to permanently distance ourselves from this industry if it does end up being real and growing? I don't know if they were thinking like that, but that's how I would be thinking.
So the question is, I'm curious what you guys think. Like, does somebody need to get burned at the stake for this? Like, do they sacrifice Gensler, or they think we can just move on and not have to do any of that stuff?
I think between Warren and him, like someone's got there's a neck to choke somewhere in there. If you're Democratic leadership, that's the saving grace in this, as you say, Mike, is like, you know, everyone's gonna have a different view, and it's like, I've heard the takes where it's like, oh, crypto shouldn't celebrate because we're just a piece of the chessboard and politics, and no one really cares. But at the end of the day, you know, we're never going to get these 80-year-olds to understand it. We just have to get them on the right side of it. No matter what the reason for the change is happening, and you got to celebrate that. So I doubt there's mix up until the election, right? That would almost be too much. But
hey everyone, this episode is brought to you by Avalanche. Avalanche is a leading network of blockchain, which is giving access to some of the world's largest financial institutions to experiment and build on crypto rails. I'm a big fan of Avalanche. I've talked about it on this program before. The Subnet architecture leverages some of the best parts of IBC over in Cosmos, the interoperability protocol, and the rollups on Ethereum, with the result that if you're a financial institution, you can build on something that's highly interoperable, but also customizable and scalable. And it's not just me. Many of the largest institutions in the world are taking notice. And a couple examples of folks who are building on evergreen subnets include Onyx by JP Morgan's. They leveraged an evergreen subnet to explore how tokenization can revolutionize the asset and wealth management industry. Citi and the DTCC digital assets are testing private market tokenization on the Avalanche Spruce testnet with Wellington and Wisdom Tree. So again, some of the largest financial institutions in the entire world are building on Avalanche. Avalanche Evergreen provides a suite of institutional blockchain deployments, customizations, and tooling designed to address company-specific and industry-wide requirements for financial services. So join the institutional investors that are choosing Avalanche today. Go to avax.network/evergreen. Again, that's avax.network/evergreen and join the revolution. Avalanche, thanks very much for making this episode possible. This episode is brought to you by Kinto, the safety-first layer 2 that is accelerating the transition to the on-chain financial system. Now, I know we're all very excited about tokenization. Larry Fink certainly is. He's on CNBC talking about it all the time. And I know we're all very excited about L2s. Here's the problem, though. If we want L2s to onboard the financial system, there's a lot of stuff that we still need, and Kinto is basically rolling out solutions for that. So one, it features user-owned KYC, which is just table stakes for our regulated friends. And if we want the institutional capital to come in, Kinto offers a really good solution for that. They also have native account abstraction that solves some of the largest problems with onboarding in terms of security and user experience today, which is still very confusing. So if we want to bring more folks onto Ethereum, Kinto is the way to do that. And if you believe in this on-chain financial system and you actually want to get more active in Kinto and become a founding member, you should join their launch program, which is Engine. That's ENGN. You can see a link in the show notes. So if you're a part of that, you can do things like participate in Kinto governance, the launch ceremony, you can priority access to product launches on Kinto, you get reduced fees and unique discounts on products launched on Kinto. So overall, if you want to be a part of Kinto and the mission that they have, I would go click the link, join the Engine program, and thank me later.
To me, there's really no argument longer term. Like these frontiers have to open up because you have all these entitlements that you have to pay for down the line, and you're going to have bull markets somewhere of growth to pay for those entitlements. So like the fact that they're coming to this now is kind of interesting, but longer term, I think it's no question. That's just the end game.
I got a question for you guys. Moving towards the market impact of this, how do you think this is going to impact ETH? Here's what I would liken this to as a moment in time, potentially, is you remember there was a false start on the Bitcoin ETF, this was famously Cointelegraph intern. And the Cointelegraph intern tweeted that the iShares Bitcoin ETF had been approved. And immediately the market jumped. I can't remember, it's like a 10% sort of candle. And it was confirmed pretty quickly that was actually a false rumor. But then the market didn't sell off that much and actually started to grind higher. And the explanation that people gave was just sort of reminded everyone that, hey, we probably are going to get this Bitcoin ETF and everyone's offsides here. And I'm wondering if there's going to be a similar effect with the ETH ETF. You know, ETH was an extremely consensus play within crypto circles for a long time. But this last year, it's moved in the opposite direction. And you know, people think it's caught in between this rock and a hard place of Bitcoin and Solana. It's been underperforming everything. There's infighting that's starting to happen. And it just started to become kind of a non-consensus play. And it looks like it's set up for the exact same thing that happened with Cointelegraph intern to take place with Ethereum here. But I'm curious what you guys think.
Yeah, it's set up nicely, but there's a few things I'm thinking about. One, we know markets become increasingly efficient when the same event occurs. So this pricing in will occur quicker than it did for Bitcoin. That's just how markets work. And the two ways I'm tracking that is Grayscale ETH ETF. The discount has already basically closed. It went from I think 25% to sub 5% in a day and a half. And at the same time, looking at the CME futures open interest, it was around the fourth highest open interest, I think. And now it's already in second place, pretty quickly getting into the first place. So to me, those are two really good indicators to see how priced in the actual ETF component is. So it feels like that has happened at a quicker pace, even though there wasn't as much lead time into the actual approval, because we went from 25% approval odds to 75 to approved in a few days. But based on those metrics, it's happening quicker than it did for Bitcoin ETF, which makes sense to me. And it feels like now we're in this phase where a lot of it has been priced in. Like, it's not surprising to me that we're pulling back a bit today. It's not surprising to me that nothing really happened yesterday in terms of price action when it was actually approved. And now we're sort of in this phase where we need to wait and see either when the S1 gets approved and when these things go live and when we start seeing ETF flows, versus just kind of wading in the waters here. That's my take, at least.
Yeah, I mean, if you look at the BTC chart here, right, we're back to Sunday, October levels, just Bitcoin ETF levels, and it's really this like middle area. So basically what the market's saying is we just repriced all of this back to, the same relative performance of the ETFs. If you think, okay, Bitcoin outperformed, down to this 0.045 level, and this ETH retraced, we're back to where we were when the whole ETF rumor run started. So that's pretty fair. Like for a big meaningful push up in ETH BTC from here, you kind of got to start assuming that the ETH ETF starts to relatively outperform the Bitcoin ETF. And, we're not going to get it for at least a couple weeks, it sounds like. And so we're not going to have that answer. So there's definitely been a lot of leverage buildup, as you say, Felix, and it wouldn't surprise me if there's a little bit of a lull here as we await that big launch.
I kind of agree in the short term, but check out the ETHE on like a 5-year chart. And I'm not a big technicals guy, but this looks like a giant, almost 2.5-year cup and handle formation, which is probably the most bullish long-term chart there is. So even if you do have, the RSI on a short-term basis is like 80, so it's definitely overbought. Just that's like long-term cup and handle. If ETH breaks out from like 35, that could be very bullish longer term.
We need some closed-end fund shenanigans to get that premium back up for the boys, I think.
Yeah.
Barry has entered the chat.
But this is not investment in by any means. It's just observation.
Yeah, come on. Quit hedging.
Come on, financial advice corner. Here's a question for you guys. What do you think the institutional demand on the ETH side looks like? Because Bitcoin has this really nice narrative that is easy to, this is one of the superpowers that I've always seen for Bitcoin is simplicity. Digital gold, I can grok that, right? It's got this really nice activation on currency debasement, money printer go burr, all these memes. Okay, I can get there super easily. Even Solana also has this really fast, it's like fast and cheap, fast, cheap blockchain, boom. What is ETH? ETH is, what is the tagline there?
Yeah, proven institutional ecosystem. Nothing is as lindy as that. For like, there's a reason BlackRock started its on-chain fund on ETH mainnet. That's why.
It's just so many words though. And then what kind of ecosystem? I hear you. I'm with you too. It's
financial services on the blockchain.
Yes, I think that's it. See, this is just my macro read, but like ETH to me could be like this generating like this staking mechanism is like the most similar thing to like a bond. And if you have like higher yields in ETH and a shrinking supply, you could actually create like a mini financial ecosystem. Mm-hmm. That's where my simplistic view of it.
Also, the whole narrative that Wall Street doesn't or understand or want ETH, I think is a load of shit. I mean, if you speak to like, I don't want to rag on Mike Green too much, but he represents that classic traditional finance guy type of framework. And anytime you hear him talk about crypto, he's like, Bitcoin is bad against the state, et cetera, et cetera. But smart contracts, that's really interesting. ETH, that's really interesting. And I think there's a lot of people that think in that way, which is that, there's a lot of innovations that could occur aside from the traditional like Bitcoin maximalist type approach.
Selling Carvana options on the blockchain.
With instant settlement.
Just a side note, today when they're adjusting settlement in the traditional financial world from T+2 days to T+1, and it's just so ridiculous to me that like that is a thing when you have like instantaneous settlement in crypto. Which is a funny side note. What do you got, Mike?
So I hate to do this and show one of my own tweets here, but this was a prediction going into this year that Ethereum pivots away from the ultrasound money meme and a new narrative will form. And I have always hated the ultrasound money meme for Ethereum because you're just doing a shittier version of what Bitcoin already does. You've lost that battle. Lean into the thing that Bitcoin can't compete on. And I 100% agreed with what Tyler said. It's yield. Yield is the thing. Like ETH can position itself as a productive asset, which Bitcoin never can. And then you get a much, much, much larger market to move into. The issue with that is that ETH is going in the opposite direction of that. And I am imploring people to listen to this. Like there's a whole line of thought right now. This is too technical for this show, but it's like minimum buy. They're talking about trailing off emissions. They're talking about decreasing the yield. It's the opposite direction that they should go. They should lean into yield and call it a productive asset. And there's a huge mental hurdle and obstacle. This is why institutional investors don't own gold for the most part. Because they're like, where are my cash flows? ETH can have cash flows.
I totally agree. I just don't understand why every crypto token needs to be viewed as money. Like that's so silly. Like imagine like saying, oh, I'm building the best new technology company in the world. We're traded in the NASDAQ. And no. We're not AI and semiconductors and computer chips. Our stock is money. It's like, no, that's you. Like no one's going to believe that. Like you said, ETH is an actual product. It's an actual utility. And I totally agree with that. Like the ultrasound money is I think that's what cursed us for the ETH BTC down only. And hopefully we don't get those ultrasound things back. And then it'll be off to the races.
Here's my prediction. I think, if you're looking at institutional money coming into the space, the next big narrative is how do I generate yield in crypto? And not just ETH, but Bitcoin. One of the things that changed that no one's talking about is, okay, this ETH ETF and SEC pivot and all this government regulation stuff will now open up an options market on Bitcoin ETFs. Now, what that does is it allows the liquidity for derivatives, which is essentially yield enhancing things for Bitcoin to exist, right? Michael Saylor could go out and generate so much yield, real cash flow once that exists. You can do it on futures a little bit, but like if you have Bitcoin, you can now generate a yield, which is naturally stultifying to the volatility, which creates more incentive for institutional money to come in and generate more yield. It's a self-fulfilling cycle, right?
Are you saying like them doing like covered calls and that sort of thing?
Calls, selling puts. Like if you want to buy Bitcoin, you can sell puts at a cheaper price if volatility spikes. Like there's ways to do it. And like this is how most income funds in the TradFi world actually function, except it's a yield arbitrage. This is how generational arbitrage actually works. Is like once the liquidity in a certain asset class grows, you can start doing all these financial derivatives, which lowers your risk, right? And that is the next phase of institutional adoption, right? You can put your stuff on your balance sheet and then hedge it out somehow. Man, that's really enticing, right? So I think it's going to be a battle between ETH and Bitcoin on yields. And this is how new financial systems actually grow and exist. Is it's a yield arbitrage, right? At the end of the day, and as liquidity grows, more and more people will go in, and your biggest access blocker has just turned into like, a tailwind. So we'll see. I'm really watching when the options market opens up on Bitcoin specifically, and then ETH options will open up as well. So, and this is all. The hands of the street, the TradFi street, they would love to make markets in this stuff. They would, Jane Street and Susquehanna, they already do it. But like, I think this is going to be the next big institutional adoption.
Hello, listeners of On the Margin. I've got good news for those of you who are in the crypto scene. Blockworks is bringing back Permissionless. We're going to be doing Permissionless 3, and this year we are heading west. So we're moving that out to Salt Lake City. That's going to be October 9th through 11th this year. We've got a phenomenal lineup of speakers for you. So we've got Balaji headlining. We've got Sriram, Munib, Matt Hogan of Bitwise, Jan Van Eck. This one's going to be a blast, guys. And I saw many of you out in London for DAS this year, and I hope to see you out in Salt Lake for
Permissionless. And because y'all are such faithful listeners, we've got, if you use code MARGIN10, you're going to get 10% off your tickets. Appreciate you all. Hope to see you out there.
No, I agree with you. I'm just, I think Ethereum wins that battle. But what's frustrating, at least from my perspective, and I could be wrong on all this stuff, but it's like everything that the key stakeholders in Ethereum could be doing to lean into this are actively doing the opposite. It's a little bit frustrating. But that said, like,
pensions love, they love yield. The biggest money pockets in the world are endowments and pensions. Like, go pitch them that. They will give you 1% of their book, 1%. And so like that to me is just like it's missing the forest to the trees.
Maybe folks who are listening to this recording might have had the exquisite pain of trying to explain Bitcoin to like a family member or someone who wasn't in this space. And, once they could wrap their head around the crazy computer stuff, the chief objection that I've failed to get tons of people over is the cash flow thing. It just, and, there are these great articles where you hear Jack Bogle describe this as well, why he hates investing in commodities, why he hates investing in gold, because you can't model it in a DCF. I just would not. And so like the market size of, you could consider ETH like it could be this weird combination of like treasuries plus money market funds plus like, yield bearing stuff like real estate in a sense. But anyway, do you guys think that some of the like the ETH ecosystem ends up getting re-rated here? Or, okay, zooming out, there was this argument with the Bitcoin ETFs that because the money wasn't actually flowing into Bitcoin specifically this time, some of the wealth effect that we've observed in past crypto cycles wasn't going to translate the same way. And I was not really a huge buyer of that thesis, because I think it's more like what really ends up happening is that Bitcoin goes up, all these crypto native people understand what happens, they try to front run, and that wealth ends up moving anyway. But ETH is a little bit different because people actually use Ethereum in DeFi, and there is much more of a direct wealth effect translation there. And so money moving into an ETH ETF might actually have a pretty differential effect. And I'm curious what you guys think about that. And if this was just like a big bull run in ETH, like spot ETH people are buying, I would be more confident about like ETH DeFi getting re-rated a little bit here. But I'm not really sure that same effect happens given the ETF characteristics. But I'm curious what you guys think about that.
I'm in the camp that it happens for some assets and doesn't happen for others, because there's a lot more fragmentation in the ETH ecosystem. You saw with Bitcoin, there's not many assets that are viewed as like levered Bitcoin. You just had so much more eyeballs on singular names. In ETH, there's like, I think DeFi in general should see some bump just from this regulatory positioning, because that's, DeFi has been hurt more lopsidedly by it than say NFTs or metaverse or gaming. So I'd think some there. And then I do believe that each should kind of capture attention here. So I think there'll be names that do, and particularly the ones that are the most closely tied to ETH activity, like a Lido or, there's L2s. It's tough because ETH could be booming, but you could get all the attention on one or two L2s, and the L2 you're sitting in might not do that well.
What's going to be difficult too now is during the same time where we begin to see this ETH ETF thing get priced in, is because of what's happened in the last week, basically every other like layer one or other altcoin, we need to price in some form of a low probability, but still possibility of them having an ETF. So Sol needs to price in that possibility, because it's not zero anymore. It's, I don't know, maybe 10, maybe 15% right now. But that needs to occur at the same time that we're also seeing this potential wealth effect. So it's going to be hard to separate those two price drivers. So I'm not sure.
I think this is where, to bring it maybe back to politics, the election still really matters. This is where I think the challenge of the what comes next ETF is that you need a futures market for an asset, and then that futures on a regulated exchange, and then that futures market has to be trading for a period of years before the SEC would look at it and approve a spot ETF. In a regime that's still controlled by the Dems, I'm pretty sure that they would stick to that. But that could get changed if I guess you had like honestly, if Trump like follows through on his promises, like there's no reason that they couldn't change that precedent. Coinbase is trying to launch regulated futures, a CFTC regulated futures market. There's no reason why the SEC couldn't look at that marketplace and say, yeah, we'll use this as the precedent. But I think that the timeline for other ETFs is basically entirely dependent on politics at this point.
Maybe we could shift to talking a bit more about the big picture, macro type stuff. Mostly just because we had this headline come up this week, which I shout out to Andy Costin. I have a little bit of my own little script going on. I love his script, but back in the mid-April, I sort of created my own little script, and it was basically different steps of looking at things through a bit more of a political lens of incentives to try and get the market higher into the election. And what I viewed it as like the steps to get a roaring market for the election is step one, sell the SPR to lower energy prices, which we just have here occurring this week, which is, and again, it's funny to look at how, during the last time they were drawing down the SPR, we had that obfuscated with various reasons why we're doing it. And this time Biden's yeah, summer driving season is coming. We got to get the price down and it's going to be an awesome summer. And that's where things are right now. And that was what I viewed as step one, is get energy prices lower. Step two, that would bring down PCE or just overall inflation on a month-to-month basis to something more manageable. Step three being QRA. I have predicted somewhat of a bullish stance on QRA. We got it being more neutral. Step four being Fed tapers QT. We got that starting in June. Step five being, even just the cutting rates of 1 to 2 times at most. This is during a time where people were expecting like 4 to 5 rate cuts, and I just didn't see that as realistic. But basically all of that occurring at the same time that we are continuing to run these major, basically recessionary fiscal deficits during a time of an expansion. All of that coming together to basically create this Goldilocks moment leading into the election. So it was really interesting to see that headline come up of just how outright they were about the SPR draw.
You know what? On the gasoline thing, I think it was more symbolic because, look, 1 million barrels of gasoline, we use 20 million a day. So it's not necessarily like on the surface going to affect supply and demand that much and lower prices, but it's symbolic, right? Like it keeps you on edge. It's kind of forward guidance of what the Fed does, where they tell you, this is a possibility, and so it takes the premium out.
Yeah, sort of keeps a lid on the price of oil too. Like it's not going to actually bring it down, but you're like, okay, well, that's a potential I need to consider. Yeah,
it's a vol stifler, vol controlling. But what else is interesting is that like it sends a message, and oil is a cartel, right? And so the prices are naturally higher than they're supposed to be because all these people are controlling the price. And if you have, your largest exporter of global oil signaling, we can release the SPR when we want, and it kind of takes the premium out of that. So, I'm with you on that.
But so to me, all of that paints a pretty bullish picture for the next few months, especially if it looks like we're having some small signs of a slowdown beginning. Not calling for a recession by any means, but to me, that's a bullish dynamic. But it sounds like, Quinn, you're not in Team Bulla as much anymore.
I'm just so last week we came on here and everyone, the amount of messages and pings after that, they're like range from what did you put in your coffee? Can you send it to Puerto Rico? Or like, it was that we were more like the crazy people in the room calling for this huge run. And my whole thesis on that was backed up by the macro coming out of this, ugly April. And, we've had a showing of inflation scares has came down. The Fed's kind of got more supportive, and that should be healthy for liquidity. But then the other big component was investor positioning. And in the crypto markets, we had, and traditional, right? So what did I say? I said NVIDIA and the ETH events. And both of those went by without a hitch. In fact, both were very positive, and hence we've seen what I was kind of calling for. To the chart earlier, we're kind of fair value, in my opinion, as to at ETH. Like anything from here, relatively, you're betting on outperformance of the ETH ETF relative to Bitcoin, but we might not get that for 2 months. And I agree that the these shenanigans with oil and stuff, and I don't think we're going back to $100 oil anytime soon, are good. But if inflation was still the number one concern, I would be more rooting that more. I think what the market has said over the last couple of weeks is that growth is more of a concern. We've seen the yield curve puke back lower. Yields are down. We've seen value, a big rotation from growth to value. Cathie Wood stocks are getting smoked relative to higher quality QQQ or the other, parts of the SPY index. And to me, the market is more concerned here about a growth scare, or even worse, a stagflation scare where yields have actually kind of picked back up. The dollar hasn't weakened and we're slowing the economy. But ultimately, I do think that that's short-lived. I personally don't think growth is that big of a deal, or I'm not too worried about growth on like a 6-month, let's say 9-month basis. I think it's slowing for sure. The data is telling you that, but I don't think it's slowing to a point that's problematic. And if anything, I think best case for markets is that it actually slows a little more and more concretely to force Fed action. So my 6-month view is not really changed. Like, there's an election to win. We've seen they will move hell and high water to do what they need to do to make sure things are supportive going into November. I'm just trying to be tactical about the entry. That's just my strategy. And it's not clear if that's today or in 2 weeks. But to me, the real banana zone would come if growth scares picked up a bit, and we go into the June Fed meeting and they put a July cut on the table, like something in that realm. The market's kind of freaked about the minutes from the May meeting, but that was before some pretty weak data. And, we get a down inflation, we get a down unemployment, some weaker stuff. And I think Fed might put cuts on the table. That to me is like the full banana zone signal. And I just think things are a little more like fair at this level, but I'm definitely not bearish.
I'm going to go out on a limb here. I got a couple charts. I'm actually leaning a little bit more bullish into the summertime here, more from a market structure standpoint. Okay, this is JP Morgan's. This is high yield spreads, which is generally a good gauge for like where the bond market risk is. The red line is high yield bond spread to worst. So this is at like lows. The credit market's telling you everything is functioning pretty well, salubrious, and that's why volatility is very low. Now go to the next one. This is the 10-day realized volatility and 30-day realized volatility. So this is looking in hindsight, the volatility of the past of where the market is traded in the past. This has been on a downward slope. Volatility is getting smaller and smaller on a realized basis. Implied volatility has a natural way of sinking towards realized. So we're almost in single digits on a 10-day volatility, which makes, the price of implied, which is forward looking, that naturally should come down unless there's some sort of event that causes the market to actually trade. So realized would rise. So my point is, this is naturally volatility heading to the summertime is going down, right? And your price of options the implied volatility should fall as well. And I think that's sort of what we've been seeing. The VIX is kind of just collapsed here. And this is all market structure wise. These are risk parity funds. It's all quantitative now that's causing this. Now go one slide further. This is like Scott Rubner shot out again. There's $5.5 billion worth of daily demand from corporates, which is essentially buyback. So as volatility goes lower and trading volume, it becomes less and less in the summertime, there's a net demand from equities, from corporations, from buybacks that's creating this natural like grind higher. And this is what we're seeing. I mean, we're almost at all-time highs today. This is the engine of market structure that is just really hard to battle unless there's events. Like, you could have had it if NVIDIA really blew up on earnings. You could have had it on Israel. But this is the engine that just keeps chugging along and is so bullish. And then the last one, this is the Goldman Sachs MOMO index. So momentum stocks, think NVIDIA, semis, like anything with with momentums in this basket, it's actually breaking out to new highs today. Now I'm not talking about crypto. This is obviously like more macro finance, but eventually, there is some caveats. Number one is like we saw some CMBS problems. Regional banks could have some issues. There was like a massive haircut on a AAA note for a commercial real estate building in Manhattan. Maybe some of those losses start flowing through to the banking sector, in which case the Fed would probably be more likely to ease. But the setup right here is like super bullish. There's no doubt some of these charts are breaking out to the upside. The sentiment is hot, but I don't think it's extreme yet. People still are trying to fade this move, which was kind of shocking to me.
Yeah, this is why I'm so bullish, is looking at growth momentum. To me, when I talk about going into a growth slowdown, that's the sector that will perform the best. And if it's setting up like this on a chart at the same time that we're, the big question is whether that first rate cut, is it a bullish rate cut or a bearish rate cut? That has a lot to do with whether it's a recessionary rate cut or just I don't know. I've heard Powell call it a mid-cycle adjustment before when he did it in 2019. And it really depends on what that occurs. But from now until that point, I see it as very bullish for sectors like this.
Yeah, I agree. And so this is another Zervos that hit today. Just a little quote. The bottom line in a period of distress is the Fed has our backs once again. The put has returned to our collective portfolios after an extended vacation in 2022 and 2023. And to be sure, risk assets are responding accordingly. Even if we priced out 5 of the ridiculous 7 rate cuts built into this year over the last few months, SPOOs just yawned. I may sound like a broken record here, but I'll say it again. We don't need rate cuts for risk assets to rally. We just need to know that the put structure is back in place and the Fed has anchored long-run inflation expectations. Now, if you look at the 2s to 10s curve, flat, right? And this is just all naturally, it's not we're not blowing off in some euphoria, but it's a grind higher that's undoubtedly bullish. Now,
what's that word?
Undoubtedly.
We just got
yeah.
this week.
And there's things that can derail it. I'm watching the yen. The yen's getting weaker and weaker. That could cause some dollar strength. And there's some other fascinating things, but yesterday was Thursday, and what we saw was really fascinating. People were selling their VIX calls and S&P puts because their hedges weren't working, and instead they were going out too short. They're increasing their leverage on their short books. So the Goldman Sachs short index was actually going down, even though vol wasn't really popping. So hedges aren't working on the derivatives basis anymore, which is kind of fascinating. My point is that we could be in this new regime where there's more short interest now. Short interest is picking up, and vol is low, causing more short squeezes higher. The caveat is oil prices got to kind of stay low. The Fed's got to maneuver the long end of the curve, so there's no interest rate shocks. That's what you got to watch. And Japanese, if the Japanese yen really implodes, then you get that repatriation of the carry trade. So those are the 3 things I'm kind of watching here to derail the bull thesis.
Yeah, this chart I just want to highlight is similar to what you're saying, Tyler. And Barry Knapp, he's phenomenal. He's an old time Wall Street economist, but he's a very actionable, practical, more market practitioner than economist. He highlights here the volatility of inflation, which it's higher. He comments stable but hotter. So the Fed's targeting price stability. That at 3 to 4, it's stable, and the volatility here, it's growing above their target, but the 2% target's kind of, everybody knows that's just a finger in the air. And so what he highlights here is the fact that actually inflation volatility, the uncertainty around it, is at the lows we've seen in quite some time. And that's actually very positive, where you can have companies passing through their earnings, the price increases to the consumer. They have positive operating leverage, and it's actually good for equities. Still not good for bonds, particularly when we know there's a Fed put, and any growth weakness will be met with more stimulus, as they've already indicated. Mm-hmm. But as you say, as long as inflation's not going 6, 8, 10, 4, 6, but it's okay in this 3 to 4. We need some inflation to service the debt issue. And I think that kind of all points to the same direction of this like slower grind higher. What I was saying on the growth scare part is like, what's that mean for crypto? But the biggest thing about this week for me, or just the last 2 weeks of the political changes, is I think of everything like a probability distribution. What are these expected values and what's the probability of their outcomes? The biggest factor here is it wipes off the bottom 20% worst case outcomes for crypto and for ETH and for Coinbase. I thought there's a decent chance going into this. If Biden was up 10% in the polls, Gensler probably would have called ETH a security and, went scorched earth. And then he's got litigation against every big reputable company in the industry. That's now off the table. So you remove the 20% worst case outcome, that shifts your expected value up by definition. It doesn't mean, there's going to be $1 billion of inflows overnight. It's not a near-term price catalyst, but over time, it shifts that probability expected outcome higher, I think, because, your worst case outcomes are removed.
I like that framing, Quinn. Like that makes a ton of sense to me.
Mm-hmm.
Yeah. And they were doing their, there's this company called Prometheum, which unconfirmed, but feels pretty flagrantly just like a plant from the SEC, which is coming out and saying ETH is a security and all this stuff. And yeah, it feels like they weren't actually trying to push that. And it's just not going to work. So
that was always an interesting strategy. I don't know how much you guys know about that business. I don't know a ton, but people have different views. But it just struck me as an interesting, they're trying to build a crypto exchange, and they were coming at the industry in a very flagrant way and saying, in tandem with the SEC, we're going to say ETH is security and launch and come to us for safety. And it's like, guys, like the people you appeal to don't touch crypto, like, and you're just alienating the whole industry. It seemed like a very miscalculated go-to-market approach, and totally backfired because the Dems flipped. So much for that.
I'd love to circle back to the discussion we were just having around inflation and whether it's realistic to get to 2%. I've been doing a bit of work this week on, basically we got the US new home sales print yesterday, and it came in quite a bit softer than what was forecasted. So it came in at 634,000 versus the forecast at 677. And that sparked me on a bit of a rabbit hole to dig in deeper, because for me, the answer to the question of whether inflation will go back to 2% lies in what happens in owner's equivalent rent, which means we need to look at what's happening with housing prices and inventory. So how to look at a few things. So this is just from Redfin, and basically it's just showing the median asking price, basically through the different months of the year, because it's a pretty important seasonal metric. And still asking prices are quite a bit above trend. So what we're seeing is that basically the sellers and the buyers don't quite want to meet in the middle yet. They're still kind of quite elevated. And this was really interesting to me because this is coming at a time where we're actually seeing supply increase quite substantially. This was a really great chart just looking at basically US new one-family houses monthly supply compared to basically the National Home Price Index. And what's really it's showing here is that, it's pretty intuitive that when supply goes up, price eventually will come back down to find equilibrium. And we're seeing that on like a lagged basis as the supply comes up. That leads to, in about like an 8 to 10 month lag on housing prices. So, as of late, we've been seeing supply increase quite significantly, either through new housing construction, home builders have been soaring, but we're also starting to see a lot of basically active listings come up, especially on real estate sectors that were pretty sensitive to the COVID, basically real estate rotation. Places like Florida, inventories are absolutely soaring right now. So looking at that and then taking it one step further is looking at basically that same National Home Price Index in blue and looking at owner's equivalent rent in green. Basically, we need to see that owner's equivalent rent come lower because, and it comes at an even more lag basis. If we think of like supply to basically active listings to housing prices to owner's equivalent rent later, it's trickling into one consequentially. And so if we're seeing housing supply increase substantially, housing prices should start to come down. There's often what happens at these cycle, inflection points is that supply keeps increasing and inventory keeps increasing until this moment where suddenly the kind of floor just gives out underneath prices, and then it starts to catch up. So, my view is that we're going to see that start to occur soon. Obviously, the trade-off is that if rate cuts really start to get priced in, that's going to bring mortgage rates down, which might spur some demand. But overall, when I look at these dynamics and how it trickles in the owner's equivalent rent, it feels to me like it's setting up nicely for that to come lower, which makes I'm trying to get to the decision here and whether I believe that can bring us back down to 2% or not. But it really has to do again with, does that inventory continue, and whether the Fed starts to hint at more rate cuts, because that can bring mortgage rates down and just spur another leg up in this whole situation.
Yeah, that's interesting. Housing's a tough one because it's the convexity of a bond, like all the bonds that were sold in 2020, 2021, they're down like 20, 30%, whatever, because yields rose. Housing's just different because it has a different source of demand. Like you'd already thought like housing prices should have rolled over massively from this, but it takes a while maybe to feed through because it's a different asset. But I agree. I think, we might be in for a soft patch of data here. There was also another one, a chart I saw about auto insurance being like a larger component in CPI than PCE, which kind of skewed things a lot. So if that was just like a beginning of the year pump and then that fades, could fade away, and PCE could come in because it's less of a component of PCE, and they just say, hey, we're paying attention to this one now.
I think that's a good observation, Felix. Like how I'm seeing the world is in October of last year. I just think back to like, I've never been so convicted in my life. That was like, if we had this pod, that would have been like 2x cold brew rant. Like the market was offside. Plus we just printed our highest GDP print basically in nominally in real terms. And then we obviously had the QRA stuff, and the market sold off 20%. And that was just, it was so one-dimensional, the market at that time. The market was offsides, growth was still strong, the economy was still strong, and then you had the Bitcoin ETF catalyst on the horizon. I think I totally agree. The funny thing is now is I actually see, so I don't think inflation really gets out of hand here because I think we're in this little cyclical downdraft. I see when I look at the more entrenched forms of inflation, which is as a proxy, you could use softer commodities like agriculture, as well as like infrastructure, what we call like CapEx commodities like copper and more of the metals. You see greater signs of entrenched inflation. But then when you look at the cyclical factors like oil, you see less signs of inflation. So what that tells me is like the 2% target isn't going to get hit, but also the cyclicality factors that make inflation volatile also are kind of off the table. So you're in this more stable regime. Eventually, how I think it plays out is the economy weakens to a point where we get more stimulus. And then that's the banana zone because the economy is not that weak, but the Fed wants to save growth over, and they think they're in the clear. And that's when you kind of can build a case for like a 2025 or something resurgence in inflation if the cyclicality element kind of picks back up because they stimulated with a nominally strong economy. So I think the way you're looking at it is right. And in this period, again, risk assets should be fine. The government's still spending at 7%, and Trump or Biden in November doesn't really change that.
Agreed.
Bottom line, I think we need Bitcoin to get out of this channel between 60 and 70. And then we'll get a better sense, at least in crypto, what the hell is going on there.
Yeah, I was thinking about Felix's phrase, like "don't diddle in the middle" or whatever. Who's saying that?
It's not me.
We're still. That was you, Tyler. Then
Me,
no one wants to claim. No one's claiming that.
Diddling.
No diddling here.
No, but it's just like we're
Drake
still very much
the chat.
in the range. We're still, oh my god, we're still very much in that range. Like we tapped up on the top and got rejected again, and we need a little more juice.
But here's the deal: we're heading into June we have Memorial Day, we got Juneteenth, the market's closed, and you have July 4th, the market's closed. Owning volatility into that is really not a great risk reward. And I think your natural risk assets should kind of grind higher here into the summertime. If what you're saying is true, CPI stays low, all these things are just like, the vol of it is just low. We should have this natural bid, and I'm hoping it leads into Bitcoin as well, but we'll see here.
Yeah, I'm gonna share this graphic that Ceteris tweeted, and look, I know that this is like the most left curve take of all time, but I will just say, and Quinn was in New York this past week, and we got a little dinner drinks, which was very nice. But this cycle is shaping up just like every other crypto. So like the exact mental model is basically playing out extremely similarly, which is Bitcoin runs first, then ETH runs next, and then here I'm going to share this graphic. And this is not scientific. Like the reason why people hate this and why it's so left curve is there's no real reason why it should play out like this, but it's just shaping up. Like this is like an extremely typical cycle with like two caveats about what's been different is that the ETFs pulled Bitcoin growth forward a little bit, and then there wasn't really a reason for ETH to run, but we've had the phase of Bitcoin running. ETH is now set up to run, and then it's probably going to end up doing what it always does and move into large caps and alt season. And I still haven't seen anything that's convinced me that this is broken. I think this is going to play out again. And this is also probably around the time that like retail starts to fully enter the market also, which is also not
that take is so left curve, it's right curve, because everybody hates on that graphic right now, like you're saying. I respect the hell out of that.
I was just going to say, like, you know what's so fascinating about that is I think you can make the argument that's the way it's always been for every risk asset, which is like,
yeah, I think so.
It is.
One of the things Mike Green, I got to give him credit for this, was like through the 2000 boom and the tech bubble, that was mainly a float dynamic where essentially like a lot of the stock was held tightly. And then you just have this small bit that trades freely on the open market. So it's probably the same thing where what's interesting about this one is, this is what I want to do more work on, but it's a theory of mine. If you're a boomer, you're not selling your assets when you're 70 plus, generally speaking. You're mainly just, you're choking the float of the investable asset universe, right? Pensions aren't unloading this stuff at all. So you're
spending your coupon, but you're not, yeah.
Yeah, and Scott Rubner has a great chart on this of like households owning a lot of the assets. A lot of the float of investable assets has been choked, and then you just create these new asset classes that have smaller and smaller floats, and then you have this convexity of these assets, and that's exactly what that chart shows. Is essentially like, yeah, you just move out on the risk spectrum as like the floats just shrink and they shrink and they shrink, and then you create, and then the frontier markets, which is usually narrative driven, and it's a story. They get this asymmetric move and everyone's a genius, and you get these like people that were there early, and then they create this whole like mystique about themselves, and then they become geniuses, and then they become losers because they don't get out, But I'm so subscribed to that whole philosophy.
It's definitely how it works. You need the early believers. They're in the core goods, and they're like averse to the stuff that's further out the risk curve. Then you get the early adopters who come in, and then you get the speculators and the gamblers, and then you get, and that's how tops form too in markets. So you see it in uranium, you see it in oil and gas, you see it every commodity in particular where there's a lot more. You get these speculation runs and stocks too, but.
I still think we're early in uranium, though. I think we're like years early in uranium.
We saw the only issue there is we saw the first 2x levered ETF come out for uranium, and I was just like, not something you want to see if you're a uranium bull.
But the market cap of the entire uranium ecosystem is tiny.
Yeah.
And they're turning on reactors globally. It's a decentralized form of power. Like that's the same thesis as crypto. It's just, if the world breaks down and deglobalization happens, you're going to need nuclear power. Anyway,
Yeah, and
another
I
And
think
you're gonna
the
need
long-term
Bitcoin
yes. And here's
You're gonna
for
need-
sure.
AI is like one of the funniest things about data centers. Data centers suck up all this energy. And the narrative about Bitcoin sucking up all the energy for the world, that just went down because they started doing work on big tech lobbyists were like, oh crap, we can't bring this up because we're using 10 times the amount of energy that Bitcoin is. But in the end of the day, what drives all that? If you want this to keep growing, you need nuclear power. Sorry.
Yeah.
The other funny thing is the halving situation, which we just so happen to have the ETFs. The 4-year cycle is going to be perpetuated again because the ETF launches coincide with the year of the halving, and here it kicks off another bull run. And I just think that's a really funny coincidence.
Fellas, this has been a really fun one. Unfortunately, I gotta run here. But
as well.
great guys.
Double meme of the
Emporium
week
Hank.
next week. Then we got to do 2
Double
memes
meme
of the week next week.
of the week. Oh shit! I actually had a pretty good
Trouble.
one for this week too, but I actually got to run now. I'm very late. But fellas, this was a fun one. Double meme next week. Cheers, guys. Have a fun
See you
weekend.
guys.